Greetings, everybody. It's Jeff Scott. It is a little bit past midnight on Saturday, so it is officially July 24th. And welcome to this week's rendition of my top-down review. I've titled this week's Will Technology and Biotech Drive Markets to Higher Highs? I believe I clearly pointed out last week that I saw some strength, at least in biotech, and did mention that semis were strong, and they did lead the market last week. It was another great week for the bulls, and now the question is, how many more of these do we have? And will market rotation, which I think is clearly occurring, drive us to higher highs? As usual, the disclaimer, this is for education purposes only. Anything I recommend in this period of education, not investment advice. I am a doctor, not a broker. Most physicians lose money with their investments. I am independent. I am not affiliated with any software vendor or trading company. Tools I demonstrate are those that I use in my daily trading. I have paid for everything I demonstrate. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I'm notifying the PUG members and anybody that would like to know about this that I'm going to do a live webinar Tuesday, July 26th at 8 p.m. This will be my monthly contribution to the PUG group, and since I'm going to talk about my upcoming meeting a little bit, I'm going to make it open to all. Topic is how I use my favorite tools to find my favorite trades. I am not going to repeat what I'm doing here, but rather I'm going to concentrate on a more bottoms-up approach using scans to find stocks that meet my favorite setup, which is a pullback to support with a breakout with momentum. There will not be a sales pitch, but of course I'll have a special offer for the upcoming seminar at the end, and I will post invites Sunday on the HGSI board as well as to PUG members. Be your own guru is sort of how I like to trade and to teach people, in that I started with O'Neill. I think CanSlim hasn't been working great the last couple of years of buying breakouts, but I do like his approach to making trades, stop losses, or at least thinking about stop losses, and finding stocks with strong relative strength and earnings per share growth. Morales and Catcher took O'Neill's CanSlim approach and taught us about pocket pivots and Bible gap ups, a way perhaps an earlier buy point and a more timely buy point than a cup and handle. They also have a great book on selling short. This is Ian Woodward, may he rest in peace, just a great trader, friend, and a huge influence on mine. He took O'Neill's work and worked with George Roberts and Ron Brown and with HighGrowthStock.com and really put CanSlim on my computer. It's my trading buddy, George Lee, Van Tharp for position size and money management, and then my mentor, trader, and friend down here in South Florida, teacher, author, John Person, whom I will be sharing the stage with a little bit at his upcoming meeting in September, and I'll talk more about that later. John's just a fantastic guy, fantastic trader, and he's got some indicator packages which I use, which I'll talk about some on Tuesday and probably mention tonight. These are a couple of his books. I have lots of software. I purposely try to remember to kill my background and my desktop so you can't be counting, but I have to use TradeStation or Thinkorswim to trade. I use Genesis because I like its charting and some of its intraday scanning ability, and but I recognize most people don't use Genesis, so I don't use it on my webinars. For my analytics, I use a number of programs, but mostly HGSI and EdgeRater. I do look at seasonality, and I look at a number of different websites. Speaking of websites, this is HighGrowthStock.com. I don't charge for these webinars. I don't sell you anything. If I make an offer, it's because I've been able to put together a number of people to buy something, and I don't take a commission, and you get the discount. And if I promote something, it's for the simple reason that I use it. And as I said before, the best thing that I can do is to get people to HGSI, John and others that I follow and use, because continued support of them through purchasing their material means I'll still have my tools to use. If you go to HighGrowthStock.com, there's a 30-day free trial. If you click on investing strategies, you'll see my name pop up as well as Ron Brown. Ron's more prolific than I and trades with a little different style, but uses a lot of overlap, and he has some great videos there as well, as all of mine are posted there going back some time. Again, John has a meeting September 24th, 25th, and 26th at the Hilton Garden Inn here in Palm Beach Gardens. It's a beautiful place. I live right up the road. I'm holding a one-day seminar on the 23rd. If you are attending John's seminar, it's going to be, I would discount it to $300. If you're not, it's $400. I have a package deal of John's seminar, my indicator kit, and John's lifetime kit that I am trying to negotiate the best terms I can for several of my followers. The more who want to get on this, the better. So I've got a couple people that have already given me their name. If you're interested in purchasing the indicators and you're one of the ones that follow me, just let me know. And my email is hgsidoc@gmail.com. As far as attendees for my meeting, I've hit my target. Since it's only July, I have time to trade up to a bigger room, so I'm going to leave the registration open. So if you didn't have email correspondence with me today, if you're not traveling on the way back from Philippines, you know who that is. If that's you, from visiting your grandma, everybody else who's paid, I've responded to. You're in. If you haven't paid and you're not one of those two that I just mentioned, I need to know, and if you email me with your interest, I'll give you the funding options. And we need to, I'm going to knock it down the final number soon, but we did hit my target, and I'm very pleased with that. Stock patterns are cyclical. I keep waiting to get to the top, and it's amazing how January, February, when we were in free fall, and now we're back here wondering how much longer can we go. And sometimes markets have a tendency to go a lot further than we thought they might, so we shall see. And I've been very long of late. When my contra ETFs start losing money on every trade, little bit here, a little bit there, I really know that with the market, I'm sensing what the market is doing. I backed off a little bit on Friday, but it was another great week, and I'm still overtly to the long side and happy about it. But Monday's a new day. If you look at sector rotation, I'm going to make some arguments about it. But for the first thing, this was a strong day on Friday. Home builders showing a lot of strength. Interestingly, financials, regional banks, insurers, broker-dealers, even though interest rates are still quite low, they did move up a little bit this week, and perhaps that drove some strength there. Transports, which have left for dead, including airlines, showed some movement last week. And utilities, although they had been showing some weakness, a lot of them showed up on my screen. So we'll take a look at individual things, but you could see here that Friday, although it wasn't a big movement day, the market certainly had a lot of a green as I look at my charts. Just out of curiosity, just remember the Dow finished up 53, the Nasdaq 26, and the S&P a little bit short of 10. So it was a very positive day. It wasn't a massive positive day, but it was a very positive day, and hopefully that means you made some money. If you look at the major markets, this is the E-minis, the middle, NQ on top, YM, the Dow futures, TFs, the Russell futures, and then we have the VIX and we have the dollar. So to me, one of the big things here is the dollar is broken out above its moving averages. The dollar is a position. Strengthening dollar is bad for commodities. But according to Larry Kudlow, King Dollar, a big dollar is good for much of our economy. So we shall see what happens there. Clearly a up week, closing near the highs for the week across the board. The VIX had a move up earlier in the week, but really stalled as well. On the weekly charts, one can see just continued march upwards. This is 1, 2, 3, 4, 5 weeks, including the bottoming week in a row, that we've seen tall green bars on the weekly chart. So this is a super strong market. And again, on the weekly, you can see how the dollar is broken up above resistance. Now, the only fly in the ointment is this is a column. The first column is the E-minis. The second one's the NQs. Third column looks to me like the TFs, then the NYSE, and then the fourth one is the YMs, the Dow futures. Top rows daily, middle weekly, bottom monthly. And what I want to point out here is we actually got a PPS sell signal on the Dow on Thursday. Everything else, daily, weekly, and monthly, are in buy signals. So that's the first hint of potential damage. I mentioned rates popped up a little bit this week. They're still extremely low, but you could see sort of a V bottom there that both on the 10-year on the left and the 30-year on the right, we moved up. So the good news is if you want rates to go higher, they went higher. The good news is also if you are a utility in a REIT who might get punished by rates that popped, they're still so low that the REITs and utilities look good despite the fact that the rates went up a tad. If I look at the Russell AD lines, whether the 2,000 or the 1,000, so the 3,000 largest stocks in the marketplace, breaking out to lifetime highs, hard for me to believe the market's going to roll over hard when the AD line is breaking out to new highs. Now, last week I showed you how the Nasdaq was catching up to the Nasdaq 100. What I forgot to tell you, that was on the daily, and you could certainly see that over the last several weeks the Nasdaq has moved up. However, on the right in white you have the spiders. Here you have the spiders. In yellow on the right you have the AD line from the Nasdaq 100, and you can see how it's tracking to new highs. Notice the AD line on the Nasdaq itself. It has clearly moved up over the last week, several weeks or month or two, but the AD line is not confirming on the Nasdaq as a whole. Another potential chink in the armor. Breadth is improving. On the left in yellow are the number of stocks above the 200-day moving average. On the right, stocks above the 40-day moving average. So why is this important? Because when we get to the extremes is when I expect the market to reverse. We're not at the extreme. So the breadth is improving, but not at an extreme. If I look at the 3-month new high, new low level, you can see that we actually backed off from where we peak out at. So again, off of the extreme. Markets are bullish with 85% of the stocks above the midline in the Bollinger Band, which is extremely bullish. And interestingly, very few stocks are in the top decile or outside the Bollinger Band. So bullish, but not an extreme. No Hindis on the NYSE, which is the standard way of looking at, or I've been using the Russell 3000. It seems to be picking things up more, and it's probably because of the number of bond and interest-sensitive stocks in the NYSE. The bulls are back in town. You can see after this series of kahunas back a couple weeks ago that we've been all green on the Woody indicator, and I hope your portfolios have been green as well. Canaries in the coal mine, another chink in the armor. We've got this descending trend line, which we ran up to and failed on Friday on the Canaries. So we're waiting for Facebook and Amazon earnings this week. Good earnings on those two. I suspect the Canaries will break out. But we are in this kind of a wedge here. And we're at the top of the wedge. And it wouldn't surprise me to see us go back and revisit the bottom of that wedge if we see bad earnings on these two. So something to watch. Certainly not real bullish feeling looking at the Canaries. Know your news and your earnings. This is a huge week. We have an FOMC rate decision. My guess is it's not going to be positive from the perspective of a rate increase. What the whole world will be watching is what Janet says she's going to be doing and what their thoughts are. There's a number of mortgage and home numbers. There's consumer confidence. There's initial and continuing claims. There's a GDP in quarter two advanced reading. Employment costs, PMIs, Michigan sentiment, energy. What a big week of news that, oh, by the way, it's earnings times, folks, and there are a lot of earnings. As I've said for years, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. This comes from, and I can't believe I knocked it off, Levitt Brothers. And it's a free service. Well, they have a paid service, but you can get this just by registering. And I should not have knocked that off. I'll have to put it back on my slide. Market thoughts. We got rotation in place as indices move higher and the markets become perhaps a little bit, I think I showed you, less overbought. And I guess the only way that happens to me is rotation. Technology and biotechs appear to offer some leadership, which if true would be bullish, especially since the financials are firming. And interestingly, utility insurers and REITs look good as well. Fed this week likely a non-event in regards to rate hike, but the word will listen to language. And EPS reports and guidance likely will drive individual stock performance more than the market this week. Here's the agenda, the usual top-down review, and let's go and take a look. Last week we did the chart of the week. These are demonstration purposes of kind of how I find stocks, how I look at them, how I take the trade. They're not stock tips, and I don't warrant performance, and I may already or have a position. I may take one. I might be selling as I'm telling you to buy. You never know. You never can trust anybody who says what to buy, and I'm just pointing that out. I do this for education only. The one I looked at last week was Mosaic. I liked it for a number of reasons, including you could see the Bongo Weekly is green. Everything's green up top. The high jump didn't count because the stock's in a downtrend. It's knifing above the 200-day moving average. Some pocket pivots and a kahuna coming out of a squeeze. And on the person indicators, you could see it was in a PPS buy signal, had a high closed doji. OBV looked strong. There was a lot to look. The stock, I took the trade, and wait a second, is this the right stuff? Yeah. And the stock went above my buy signal very quickly, as you could see here. So this would have been Monday morning. Had a buy stop, I got filled. And I got filled at the target price, which was $28.75, and I ended up selling it at the end of the day when a PPS sell signal came in. It wasn't worth it to me to stay long, and even though I didn't get stopped out, I just decided with a PPS sell signal coming here, and not sure what the market's going to do. I took a 25-cent loss on it. Again, the PUG group was formed about a year ago. It's dedicated to advancing trading with the integration of HGSI and the Real Trading Platform by John Person. I'm opening up the meeting this week, and we'll show you how I use these tools to find trades, and we'll come back to this week's chart of the week and why I like it shortly. So very quickly, let's go into my market view, and for those that haven't been here before, there's 5 indicators we're going to look at. Number 1, we're looking at the color of the paint bar. These are an Elder Impulse indicator. A green paint bar tells me the buying window is open. It means it's filtered. It's okay to buy. It's not okay to sell. Holding is always okay. If it's a red paint bar, the selling window is open. It's okay to sell. Not okay to buy. Holding is okay. And if it's blue, I'm free to do what I want. Second thing I'm looking for are these red and green arrows. These are John's PPS buy and sell signals. Third thing I'm looking for is where we are in relationship to the envelope. And I know that if I get a big break below the envelope or I get too far above, I'm going to snap back into the envelope. Fourth thing I'm looking at are these dots here. These are MACD divergence, sort of a radar screen for that. So when I see that, I look down at the MACD to see if there's a divergence. And frankly, if you look here at the histogram, you see how high it is, where my arrowhead is. And clearly, let me get a tool. Clearly, between there and there, you got a downtrending MACD where you have a very clearly uptrending stock. So that tells you reducing participation, reducing pressure to go up. And then the fifth thing that I'm looking at is my high jump is what percent are we of the highest reading of extension in the last 200 bars. So Nasdaq, blue, buy signal, buy signal, buy signal. So PPS buys everywhere. Blue at the upper end of the envelope, so I know there's risk of pulling back at some point. This MACD divergence makes me aware, but sometimes it takes a long time for it to kick in. We're at 95% of how extended it usually gets. Clearly the Nasdaq's ahead of itself, and it doesn't mean it's coming back, but it may just take a breather. The Dow, blue, see, buys everywhere, some MACD divergence concerns on the weekly, but everything's a buy. Blue on the daily, 95%. Same comments. S&P 500s, buys everywhere, blue on the daily, 96. And then lastly, the S&P, we looked at the S&P, let's look at the Russell, look at the Russell futures. You see the MACD divergence stalling out, otherwise in a buy signal at 95.75. So this is a market that's very strong. It's at the top of its high jump, 95% or above on each of the major indexes. This tells me this market's probably it needs to pause. I did not say it needs to correct hard. It could just go sideways, let the moving averages catch up and move again. But I see reasons to expect some of these, that at one of these weeks we're not going to have a positive week. And like I said, it doesn't have to be a big pullback, but we are getting out ahead of ourselves. Very quickly, XLB. Still in a buy signal and all. It's come back some with blue bars. XLE. Notice it's a sell signal with a red bar on the daily. So XLE definitely showing weakness. If you have a deep energy portfolio, you've seen your stocks give back some. Financials, which had been weak, are in a nice uptrend, have now gone blue. So they moved back from way below the envelope, back in and up to the top. Still look good, although the blue bar. Industrials, now in a PPS sell signal, MACD divergence on the weekly, so some damage being done to the industrials. Technology, as I said, this is one of the leaders right now, but it has gone to blue as well, and it's got the MACD divergence histogram firing. Staples, in a sell signal, these and utilities have been big leaders through most of the summer thus far, showing some tiredness in a sell signal. Utilities, quick reversal of their sell signal. As I went through my charts this weekend, there must have been 100 out of the 700 charts I looked at that were utility stocks. All the same pattern, run up, sort of a flag, and breaking out. Healthcare, I mentioned biotech leading the market higher. Look at the big move that healthcare had. Again, blue bars, but still in a buy signal all three time frames. And then discretionary, kind of sideways with a sell signal early or at the end of last week and a buy signal at the end of this week. So clearly energy is weak, and healthcare and technology shows some strength. All right, now let's go into HGSI and let's go down to Woodward and Brown user groups, and let's go ahead and let's do some analysis. So we're going to look at the top-down view, which is price and volume only, heavily weighted towards yesterday, a little bit for the last week, and very little for 3 weeks. Rank it by raw combo, and we could see, based upon that, the strength in this market have been the mid caps and small caps. You can see the S&P 500 and 100 are actually down here. Bonds were weak, gold miners weak, volatility down at the bottom, and oil. As I said, the dollar was stronger. We'll look at that in a moment. S&P 500, no kahunas in the last couple of days, so we're going to go to the clean view. So the weekly bongo on top remains green, which is a buy signal. Sort of looks like it looks topping, but it could change tomorrow. But I think the important thing to remember here is that we've broken out to new highs. And that is exciting. So new highs on the S&P. Every day we close higher is a new all-time closing high. On the Dow Jones Industrials, similar. They did have a pullback on Thursday, positive day on Friday. Bongos are green. If I look at the Nasdaq composite, you can see ending the week at the high. Now, it has not taken out its past highs yet, so I guess to confirm that the bear market's over, it'd be nice to see some of the secondary offerings, including the Nasdaq, take out prior highs. And then the Russell 2000, which had been a laggard, similar to the Nasdaq, still has a ways to go to take out prior highs. However, we are getting a series of higher highs and slightly, but I think made it higher lows. So the markets have made a dramatic turnaround although we still like the secondaries to confirm. The dollar, as I said, it broke up above resistance here, and dollar looks like, to me, like it wants to go higher. The bongo is green, and that may cut a tailwind or headwind rather on certain stocks. Some of the stocks that might be at risk are gold stocks, and they pull back below the 17. Right now, a shallow pullback. This is the 1,000-day moving average that they actually drop below. Silver, which has more applications and industry, looks very similar. So, and then lastly, the loser of all, the VIX, remains very small. It had a little peak up on Thursday, but gave back those gains come Friday. Now, if I want to look at the market and look at top-down review, I like to look at industry groups. I've got 174, and I'm going to look for the two-day force up to find those that have momentum, and I got 71. Two-day force down, I've only got 2. Generic pharma and chemicals were the weak groups. 5-day down, I brought it out to 24, and the 5-day up, I have 866. So overwhelmingly to the bullish side. And I like to, what I do as part of my routine is I make sure I'm ranked by raw combo. I right-click on the group, change the index group, and I take a look at what's driving the price. And let's switch to my webinar view. So what do I see here? I see a stock that just took off, and I'm not going to chase. TCCO was up 78% on Friday, and that's after coming off the high, $2.50. So a little bit too hot for me. That might be why the group is here. Cisco, choppy, now looks to have broken out. Everything is green. OBV looks strong. Doesn't make a lot of earnings growth, but it makes money, pays a 3.4% dividend yield. Gigamon, I like this chart a lot. Had pulled back to the 17, broke out on Friday with a mobile breakout. Everything is green. Pocket pivot and Kahuna. Great earnings per share growth. It does have a big multiple. That might be one to be watching. All right. What else we got here? Semiconductor devices. As I said, semis have been hot. Qualcomm being the leader here, and had a Bible gap up on Thursday, closed even higher on Friday. Everything is green. Earnings are out. Curious what a weekly chart looks like on this puppy. And you could see a big move up here. It's got a lot of resistance here around 65, 66. So Qualcomm trying to become a leader again. AMD, a cheap stock, but a beautiful bull run here. Bible gap up on a mobile breakout squeeze, and a Kahuna on Friday, I believe, on earnings. Marvel Technology, a breakout earlier in the week as well. I'm not sure what the news was there. So I would go through each of these groups, looking to see if there's anything to buy. REITs were strong this week, as I mentioned earlier, and some of the ones that were the strongest are these entertainment and lodging trust. This is Marriott, Host Marriott Financial Trust, HST. See the pocket pivot, see the strong OBV, everything green. Great earnings per share growth, pays a 4.5% dividend. Multiple is small compared to the growth rate. Look at the group strength, as high as it can be. I liked Host Marriott. That wasn't the one I picked, but it was one I looked at. Digital Reality Trust. This is one that invests in technology assets, if I remember correctly. And notice the pullback to the 50 and the Kahuna. This is one of my favorite trade setups and one that we'll be looking for Tuesday. Uptrend, pullback to support, and momentum. LaSalle Hotel Properties has broken out with a bummer pocket pivots. Everything is green. 6.5% dividend. Pebblebrook Hotel Trust, I looked at this last week as it was breaking above the 200. Multiple pocket pivots. Looks great. 4.9% dividend. And let's see, the other ones that I liked were... I shouldn't be singing. Same pattern for Diamond Rock, pays a 5% dividend. Not going to go through all of them. I've got one to talk about later. Ashford was another one trying to break out. This is a bit too loose. It pays a 3.1% dividend. Suffice it to say that REITs were one of the strengths that I saw this week. Banks, especially regional banks. And as I often say, it's hard for me sometimes to pick a regional bank If I think regional banks are going to be strong, I might look at KRE and take a basket of them. And KRE will look like most of them breaking above the resistance of the 200. So regional banks have some strength. Telecom carriers, I like these a lot. AT&T, a pretty classic pullback to support on the 17-day moving average. PSAR reversal, a pocket pivot at Kahuna, a mobile breakout, pays a 4.5% dividend. Might be a nice opportunity to pick up some AT&T. Vodafone pays a 5.2. It's a little bit lower in the pattern, so I left it alone. Verizon, I like this one as well. Sort of a little flag and a breakout with a Kahuna and a mobile breakout on Friday. So if you're looking for some dividends, one of the other ones that I own is CenturyLink. Why? Because it pays a 7% dividend, similar type of a pattern. Lots of momentum coming into this group. Restaurants, a lot of interesting things there. Chipotle, let's just take a look at this. And in fact, let's go into TradeStation. And let's go into Screener, CMG. Now let's see if I can make this into a 5-minute chart. Now you can't see how far Chipotle actually fell after hours. And the point of this is, despite having a very ugly after hours performance, I'm not getting the after hours in this. Let's see. Despite having a horrible after hours, it traded up almost the whole day. So is CMG out of danger? Is it time to buy? It's a compelling looking chart. Notice the bongo turned green, had a Kahuna pocket pivot, closed above the 50-day moving average. Group strength looks good. That might be one worth looking at. The pizza companies are strong still as well. So restaurants looking good. Infrastructure software. Microsoft's a growth story again. Had good earnings, had a Bible gap up. Of all stocks to have it, mobile breakout and a pocket pivot, and that was on earnings. Utilities was another group that looked good. This is Exelon. There's a number here that all have similar patterns. Sideways, now want to break out, turning green. Pocket pivot, Kahuna, 3.4% dividend. You have to look at them yourself. There's a lot of them. Application software. This Coney is an outlier. Had a major move on Friday and took the number with it. Thursday and Friday. Don't like that candle on Friday. I wouldn't be chasing this one either. I mean, that's really the strength of this group. Looking below this, you can see biotech is still up there at number 12. Airlines have come out of the debt to be number 13. Specialty pharma 14. Consumer finance. Some of the stocks that have some big dividends. Nope, these are the credit cards. That would be mortgage. Autos, large pharma. Cement still strong. We talked about last week, as are steel, and there's the casinos. A lot of strength in the market. So I'm going to show you what I did today, and then we're going to take a look. I did that group inclusion filter. I came up with a number of good-looking stocks. I take all my bullish stock lists that I follow, which are a lot. I created the consolidated buys. I filtered them for $5 and 250,000 shares. Looked at 710 stocks. Let me show you some of the ones I liked. Go to my buy watch. Many of these we've already seen. I'm just going to go through them quickly. Swift Transportation. Not a big growth stock, certainly not a right upper, lower left to upper right corner, but Kahuna, mobile breakout, Bible gap up, everything green. Earnings are now out. Big demand on this stock. Swifty Transport, SWFT. I looked at AT&T, looked at Host Marriott, Pulte Group. You know, the homeowners have had a big move. They might be getting too far in the tooth, but when I look at Pulte's earnings, pays a 1.6% dividend. Let's look at this on a weekly chart. I thought this was interesting, breaking out after really being sideways now since November 2012. Look at that group strength on the weekly chart and also, of course, on the daily chart. Mobileye, are we going to have self-driving cars? If the answer is yes, you're probably going to have Mobileye in them. So Mobileye setting a multi-month high, probably. We got ways to go to get to the annual high. Nice uptrend, broke above its moving averages, had some pocket pivots. Nice looking chart. Verizon we looked at already. Yahoo, I only put this here so I remember to watch it. Apparently, somebody's about to put a bid. Is it Verizon? I can't remember who it is, but they're expecting a bid this week. It'll be interesting to see how much they get. They've got a lot of Alibaba stock, but there are some tax questions. They got a good name, but does anybody actually use Yahoo except for the user groups? We shall see. Blackstone Group pays a 4% dividend. Their earnings came out. They had a pretty good story with it. Stock's been in a pretty bad downtrend. I wonder if it's done going down and it's going to start going back up. It's still deep in its pattern, maybe too early to buy, but I know the company well, and they said all the right things. I'd like to see it clear this 200 before I got interested, sort of on a watch list. Hawaiian Holdings has been one of my best airline holdings. I got back into the stock recently, had a big move up on Friday, still has some big earnings coming in, trades at a market multiple of 11 of an airline market. Centene is an insurance company that we've talked about here in the past, breaking out to, I don't think it's all-time highs, but let's see. Nope, all-time highs are back here, but breaking out, so you got your beautiful cup here, handle, and a breakout. Everything's green. This is one to be watching, if not owning. We'll come back to that. Cara Therapeutics, don't know anything about this. In the healthcare services business is what I do. I don't trade a lot of the stocks that I do business with. I don't do business with these and don't know them. You see a stock that's had basically nothing going back since February. And it had a big move on Friday on volume. Let's look. Friday's volume was 3.7 million shares, 314,360, 244,409. So this was 10 times average volume. There's something going on here. I like the pattern. I like the kahunas. PSA reversals, mobile breakout screen, everything is green. You can play this as Dan Fitzpatrick says, like a millionaire, because it's a $6 stock, or actually it closed at $4.47. So it's a cheapie. No, that's not $6. My bad. It closed at $6.45. Panera Bread, sideways pattern, looks like it wants to break out. Gigamon, we looked at. Here's a steel play that I was impressed with. Look at the earnings per share coming in. It turns out a lot of the steel companies are showing some earnings coming in next quarter. This is one that hasn't had a big move. I've been playing TCK and US Steel. Another transport stock, not ready yet, but breaking above its moving averages. This is JB Hunt. Texas Roadhouse had a Bible gap up, has traded up since. Looks like it's breaking out again with a kahuna, pocket pivots, and a mobile breakout. KKR is a lot like BX, an asset management company, pays a 4.5% dividend, and it too has been in a tough downtrend. Looks like a bottoming position to me, and I actually took a position here last week. Omega Healthcare Investors, another REIT, 6.5% dividend, certainly not extended and breaking out. TCF Financial is one of the, why did I like this? Broke above resistance, OBV is strong, kahuna in a pocket pivot and a mobile breakout. One of the regional banks, pays a 2.2% dividend. Frontier Communications, another one of the telecommunication companies. Notice the stock really is in a small trading range going back a year, pays an 8% dividend. Here's another retail bank breaking out to a new high, First Pac Trust Bancorp. Another one of these leisure REITs, EPR, Entertainment Properties Trust, probably too extended to buy, just had a little base here and breaking out again, pays a 4.6% dividend. Sovereign Self-Storage, this is my pullback to major support with a Kahuna PSAR reversal, mobile breakout from a squeeze. Well, I like to see the bongo go green on the weekly. This is an early buy, pays a 3.5% dividend. Ironwood Pharmaceuticals, I think we talked about last week, have no idea what they do, but they're breaking out and running. Chesapeake Lodging Trust, this almost was my purchase buy of the week, 6.2% dividend yield. Look at the group strength, breaking above the 200. Wingstops, another restaurant play. I'd like to see it break above the PSAR dots before I got interested. Another hospitality REIT, Diamond Rock Hospitality, broke above the 200. Great group strength, pays a 5% dividend. Spirit Real Cap, another REIT. Here's a Semtrex, which is a pollution control company. It's already had a big run, so I'd be careful with this, but I was very impressed with the chart. And look at the potential earnings per share coming in. If they make these twos 39 cents, that puts a multiple on the stock, if you double that to 78, of about 6. Now, I don't know that they're going to double it, but they've definitely got earnings coming into the stock. CETX, be nice to buy it at a pullback. It's had a big run. Another REIT, Coresight Realty. This is a REIT. Another REIT, big move up, pays a 7.3% dividend. Who says there's no yield in this market? Here's one that is setting up, not quite turned green on the bongo. Energy Recovery, ERII. It's had a nice move, got above its moving averages. Look at the group strength here. I just would like to see some momentum come in, a pocket pivot or a kahuna. Medical Property Trust, another medical REIT, 5.8%. Spectrum Brand Holdings, consumer staples, pulled back to the 50, right below the PSAR dot, had a kahuna and a mobile breakout from a squeeze. This is one that I would call a get on a plane trade. We'll talk about that on Tuesday. I have a specific way of managing it. This is a very low risk entry. Store Capital, another REIT. You've seen how many REITs? Cyrus One, a REIT. W.R. Berkley, an insurance. I saw quite a few insurance stocks. Remember I said the dollar's a position? Let's look at a weekly on the dollar. Dollar's been selling off ever since it peaked last in March. It just broke above the 50. Everything is green, a kahuna and a pocket pivot. Tell me that that wasn't a stock that you wouldn't be interested in buying. Of course you would be. Well, it is a stock, UUP. It's an ETF on the dollar. Another insurer that sort of has a cult following is this UVE. Break above the 200 with that strength of the group. I bet this one wants to run again. Chimera Investment. The mortgage stocks have been incredibly strong. I guess they're risky, but I'm not sure why. I guess if the economy goes or rates change, but I think firming rates are good for these companies. Notice it doesn't move much in price going back 3 years, but it does pay an 11.8% dividend. I'm getting older. Those dividends are starting to look much more attractive now that I think about a fixed income, although I did start another business, so it won't be fixed for a while. Fabrinet, another nice uptrend. A little bit of a pullback towards support. Not sure it's done going down, but it's on my watch list. Greenbrier, they refurbish trains. Trains are starting to move again. They've got a good backlog, broke above the 200. I'd like to see momentum before I start chasing. Another of the self-storage REITs, they've all pulled back some. They've been great performers. Third Point Reinsurance, breaking above the 200-day downtrend. Strong group strength, mobile breakout. Lots of insurance stocks made my list. Here's another hospitality REIT, breaking above the 200, strong group strength, pays a 7.9% dividend. Defense stocks have been on fire. I missed them. I've been trying to get back in. Here is Northrop Grumman pulling back to its 50. Give me some momentum. This might be a time to get into what's been a very very high flyer. A lot of these defense stocks have been on fire. Hasn't given me a lot of chances to get in. This was a good chance down here. Of course, I missed it. So those were the lists that made my buy. So let's go talk about the one that I'm recommending. Excuse me, the one that I am hypothetically recommending as my chart of the week. So again, this was put out for educational purposes only. It's not investment recommendation. I may front run you, I may not buy this, but the one that I found interesting is Hartford International Group. Stock has pulled back to a confluence of moving averages. It had a mobile breakout on Friday. Everything turned green. OBV crossed, relative strength crossed above the moving of the S&P. The unbalanced volume is trending up. It had a kahuna. I like the price bar. I think this looks interesting. It pays a small dividend. On the trade station, indicators had a high closed doji and a new PPS buy in the weekly. Look at how strong the OBV is. And on the daily, a new PPS buy. So I see a lot that I like on this. I'm going to go long at 44.82, stop at 43.10. Risking, that's not that. My bad. I got to change that. Hold on a sec. Risking 3.8%. I forgot to change it from last week's number. And it's not 81. And I can buy 1,150 shares per $2,000 of risk capital. Reminding you again of John's and my meeting for questions, HGSIDOC@gmail.com. Live webinar Tuesday night, 8 p.m., open to all. How I use my tools to find my trades. This will be more a scanning and a bottom fishing approach rather than a top, not bottom fishing, but a bottoms up rather than tops down, where all I really care about is the market. I do not ever do a sales pitch. I may take one or two slides to mention some of the products that I use, and I often have some special offers, and I'll post an invite Sunday on the HGSI board as well as the to PUG members. If it's not Tuesday the 26th yet and you don't have that information, if you ping me with an email, hgsidoc@gmail.com, I'll send you some information. Hope to see you in Florida. Have a great week, and good night.